Welcome to our Forex and CFD's Market Focus Report for Monday, September 16, 2013. Let's go ahead and take a look at our calendar over the past few hours. Earlier, we had New Zealand house price data come out. These data indicated that house sales still remain strong, though pulled back from the prior reading, and house price inflation remains elevated in New Zealand. We, of course, will see new house lending restrictions imposed from October 1st in New Zealand to try and slow down that overheated sector. In the UK earlier today, we had Rightmove house price data released. Those data came in quite strong, but were a little bit lower than the prior report. In the Eurozone today, we expect CPI data will remain relatively tame and significantly below the ECB's 2.0% price target for CPI data. We'll also get some labor costs there. Of interest in the North American session will be Empire Manufacturing. We're expecting an improvement over the last month's report. And then, of course, we'll have industrial production and capacity utilization numbers. Our big information in the U.S. this week will come after the Federal Reserve's interest rate decision. Most traders expect the Fed will reduce its monthly purchases of treasuries and MBS by a collective $10 billion by midweek. There is a chance, though, that the Fed may pull back by as much as $15 billion in monthly purchases, so that will be the most important thing to watch this week. Let's go ahead and take a look at some FX and CFD activity today. This is our US dollar daily activity index, and we can see that the dollar is quite weak today, extending the September downward monthly trend for the US dollar. With the exception of this spike right here, the dollar has been underwater for the entire month. Let's go ahead and take a look at the euro today. Earlier today in the Eurozone, we had some relatively benign and dovish comments from ECB officials. We expect ECB President Draghi will also be relatively dovish in his comments today, much as he has been recently. The euro has a nice downward trend today across the board. Japanese yen, no real trend here is discernible today so far. This is the daily chart of the yen's activity index. Japanese financial markets were closed today for a market holiday, so we'll get another chance to see what the yen is up to later tonight when the markets reopen. British pound, we just talked about some Rightmove house price data earlier today. The pound has moved lower today across the board. We see a downward trend in GBP activity for Monday. Swiss franc is also trending lower today. It's quite weak across the board, and the downward move for Swissy is accelerating. We have not seen this much of intraday selling pressure in Swissy since looks like July of this year. Of interest to us this week, we have the interest rate decision from Swiss National Bank. We expect the SNB will, of course, keep policy unchanged, and any remarks from officials are expected to continue to address Switzerland's deflationary pressures and reiterate the SNB support for the Euro-Swiss cross at 1.2. Let's go ahead and take a look at the Australian dollar daily activity index. We can see the Aussie is quite strong here today. Didn't really have much in the way of new economic data out overnight. The Australian dollar took its cues from the decision that was announced yesterday by former U.S. Treasury Secretary Summers that he will, in fact, not be a candidate for the Fed chairmanship to replace Bernanke. So part of this U.S. move down here lower, just looking at the U.S. dollar activity index again, can actually be credited to the decision by Summers to withdraw his name from consideration for the Fed chairmanship. The markets now expect current Vice Chair Yellen will likely become Bernanke's successor, and she is expected to keep a relatively dovish monetary policy in place. So we can see that the decision by Summers to withdraw had a downward impact on the US dollar and caused some other currencies such as the New Zealand dollar and the Australian dollar here to fly higher because they are more interest rate sensitive currencies. In Canada, of course, we see a little bit of an intraday upward trend, not too much, but the Canadian dollar is on the positive side of things here today. And then, of course, we see continued pressure higher in the New Zealand dollar. As we can see here, the New Zealand dollar has been in a nice upward trend for the month of September, as evidenced by its position above the blue 0 horizontal line. Let's go ahead and take a look at some other asset classes today. Here we have the daily chart of the gold versus the US dollar. The gold actually spiked higher today at the open to about 13.35 against the US dollar on the Summers move. But of course the gold has moved lower on an intraday basis and got down to a low of 13.22. Much the same story in silver. Silver gapped higher at the open on the Summers news. Of course, the indication is that a Yellen-led Fed will actually result in additional monetary liquidity in the system, which could result in more demand for riskier assets such as gold and silver. Silver, of course, faded after the initial gap higher, traded as low as the 21 spot 77 area. Let's go ahead and take a look at another asset class here. Let's look at crude oil. We had an announcement over the weekend that the U.S. had agreed to a Russian-led initiative to disarm the Syrian chemical weapons that were used in August 21st against Syrian residents. As a result, we had a significant move lower at the open here in crude oil. This is Brent futures. Brent futures today opened at 110 spot 32, got as high as right around the 111 figure, and then came off a little bit lower. Much the same thing here in West Texas Intermediate futures. They gapped significantly lower and traded as low as 106 spot 23. So we will see possible further divergence this week between Brent crude futures and also the West Texas Intermediate. Let's go ahead and take a look at some of those FX cross rates, which are always of interest to us today. This is the Australian dollar against the US dollar. This is a daily chart. We can see a significant gap higher here during the session in Asia and Australia. That was on account of the news that Summers had withdrawn his name from consideration for the Fed chairmanship. That's about an 88 pip gap higher if we're counting. Our next upward target would be this blue horizontal Fibonacci extension area coming in at 94.11, and then any additional strength in the A dollar we would expect would possibly test technical resistance up here in this red horizontal resistance line coming in right around 95.10. Above that, we see some potential selling pressure up around the 95.74 area. We're going to take a look and see if Aussie can find a floor this week around the 92.55 support area here. And then, of course, we have this yellow downtrend line to consider as well. This is a daily chart of the Kiwi Yen cross. Again, we said Japanese financial markets were closed overnight. and therefore the yen took most of its cues from other currencies. We saw the relatively strong housing data out in New Zealand overnight, and those kept a bid in Kiwi. We're taking a look at this key 50% retracement level here. We looked at this level again last week. That level comes in right around 80 spot 42. We will see if the cross rate can maintain a floor above this area. On the upside, we're looking for technical resistance and some possible selling pressure up here around the 81, 83 area. And above that area, we would look at the 83 spot 55 area up here as a next upside target. Let's go ahead and take a look at the Canadian dollar Swiss franc cross rate. Here we have a daily chart. We can see a significant gap lower here today. Again, that was driven by our weekend event risk that materialized in the Summers announcement regarding the Fed chairmanship and his candidacy being withdrawn. We saw today that the cross rate almost perfectly tested this key retracement area that we have down here. Let's call that 89.24. On our upside today, we saw a test of the 50% retracement area of this recent range. That 50% retracement line came in around 89.87, and as we speak here, we see the cross rate is establishing a new intraday high. On the upside, we would look to see if this rate can test the 90.11 area, and then it has this yellow downtrend trend line to contend with. This is the daily cross rate of sterling Kiwi. This is the British pound against the New Zealand dollar. We had this significant gap lower, so we moved from a lower yielding currency such as the British pound into a higher yielding currency such as the New Zealand dollar as a result of the Fed news overnight. The pair was briefly challenged this yellow uptrend line here, and then recovered. This 193.92 area becomes some interesting technical support for us if we can hold that area. If we cannot hold that area, we would expect a move lower down to test the 192.31 area, possibly reaching this 191.70 area here. On the upside, we are looking for some selling pressure to come in, possibly around the 195.16 area. That was, of course, an area that the rate settled right around at the close on Friday. Above that, we look at 195.52, which was right around Friday's intraday high, as our next upside target. And the final cross rate we want to take a look at today is the euro against the Australian dollar. Today, the euro has not been able to move above this 143.66 area here. That is Fibonacci resistance area. That is this red horizontal line. Any additional selling pressure for the euro against the Aussie, we would expect a possible test down here at this 140.26 area. And then we have this yellow uptrend line coming in down here. We're going to see if the market can be supported by this area when the rate gets that low. We appreciate, let's actually go ahead and take a look at one more cross rate here today. This is the, again, another chart of the Aussie against the US dollar. You can see it's hovering right around this 93.55 area here. That is consistent with our Fibonacci extension area. Again, we're going to look to see if Aussie can make another move and test this 94.66 area over here. Again, thank you for watching our Forex and CFD market focus report for today.